Hello everyone, my name is Vikas Shukla and I post a lot of videos on my wide spectrum channel and I cover a huge lot of topics, and in today's topic I am going to talk about cash out refinance, and this refers to, of course, as you have guessed, for your mortgage or your home loan. So the idea for the cash out refinance, and I am referring to some specific cases where cash out refinance could make tremendous sense, especially if you have seen my other videos on stock market and buying stock, and especially buying at dips. Then the cash out refinance could come handy at some particular point of time. So the cash out refinance, and because I also invest in rental homes, and maybe you also may have your own home that you live in, or you may have a rental home. Over the period of time you pay out its mortgage, and then the amount of money that you pay against the principal, it pays off the home and you create something called an equity. So basically, to give an example to get you a better understanding of it, let's say you have a $400,000 home and you have already paid off for the period of last few years or last 10 years or so, $200,000 of it. And then so your balance outstanding loan is 200,000. Now what you could do is the bank, and let's say for example now during the COVID-19 situation, the interest rate has been brought down. So your earlier home loan or mortgage loan was something like, may have been like 3.5% or maybe 4% for 30-year loan. That could come out like a 1% point lower. So that makes one sense to do refinancing now. It will lower your interest rate, monthly interest rate. So another thing that you could do is to take out, so for example, now what you could ask the mortgage company or any other, or the existing mortgage company or other mortgage company, to give you out the loan of whole $400,000, but they will not be willing to $200,000 loan because they want to fund only like 80% of your home value, which in your case will become $320,000 if it's 80%. Sometimes it could be less than 80%, 70%, 75%. So let's say you are successful in getting 80% of the home value being considered for the second for this mortgage renewal. Then you get a loan of 320,000. You use 200,000 of that to pay off your original mortgage, and then 120,000 is just cash for you. And this cash, it comes at a very low cost, very low interest rate, something like 3% or even lower for now, for a 30-year, this is like dirt cheap. Now the question is how you want to use this $120,000 cash for a useful purpose that makes you money. So I usually plan to do, or I intend to do, is to wait for the stock market to crash. Right now the stock market is an all-time high, so it's probably not a very good idea to use the $120,000 cash to invest into a stock market that is an all-time high. But let's say, and that's what you need to be prepared for it. Let's say over the period of next 6 to 9 months, and or maybe more, or maybe earlier, but I'm just giving you a time frame, the stock market, which is currently at 3300 S&P 500 index, crashes down and it reduces to something like 30%. At that particular point of time, it may be a very good idea to use that cash of 120,000 to progressively buy more and more stock as the stock market keeps going down. So and then what will happen is you need to set what will be the entry point. that is something you will need to decide at your gut feeling of what your entry point will be. You could combine it. For example, the market is crashes like 20%, or the S&P 500 and goes down to elsewhere something around 2700. That, for me, that would be the point where I will start doing like a put sell, and then that put sell would mean that I'm further 10% down over the S&P 2700 index, and I could actually be buying at something around 2600 to 2500 and use some money out of $122,000, for example, to buy some stock, and everyone's amount of the cash out that you will get will depending upon how much equity you have in that home this thing. So coming back to another point that I wanted to make in relation to the stock market is with that 120,000, you could actually borrow more from your stock broker to buy stocks even more than 120,000, and depending upon different brokers, you could get something like for 120,000 stock, you could actually get something like another at least 70-80,000 from the stock broker to take your investment to an even higher layer should the market crash further. So this is strategy combined with the buying at the dips strategy, and I have that video in another video, you can search for it. Buying at dip strategy plus the put sell strategy could make you very healthy in a very short period of time, but the things need to align for that, and you need to be prepared for that. Instead of the cash out refinance, there is another option that I wanted to tell about, is that home equity line of credit. And home equity line of credit is probably even better because you don't pay the interest rate on the home equity. So you have a home equity. In the same example, for example, you have paid off half of the $400,000 home mortgage. So you can actually get a home equity line of credit of something like 320,000, 200,000. You get a home equity line of credit of 120,000, which means that you can withdraw out of 120,000 as much as you want and only when you want, and you will be charged for the interest only for the amount that you withdraw. So for example, if you are not sure, for the market has not yet crashed and you don't know if and when it will crash, and you want to buy stocks out of your home equity line of credit, then you could actually get a home equity line of credit and be ready when the market crashes. So the home equity line of credit process takes some time, so you need to plan ahead. It will take maybe 3 weeks to 4 weeks because they need to check all your papers, your salary slips, your other expenses, your bank statements, and your current accounts, your debit cards, your credit card details, and everything. But this could be another good option that you could keep your line of credit and credit cash ready and be prepared when the market crashes. You start drawing this stock from the home equity line of credit. So this is my idea of how we could prepare and keep some cash ready and wait for the right time for the market. And one thing that you need to keep in mind that low price or the market crash may or may not come, and then in that case you should preserve your cash and make sure that it's not necessary to buy the stock at whatsoever point. The one last thing I want to say is, even when the market is high, there are startup companies that have its stock prices at a very low price. I mean, there are stocks that are independent of the overall market thing. There are stocks that are dependent upon the current market scenario, for example, Nvidia stock, in AMD stock, if the market is substantially up, these will be substantially up. Amazon stock, eBay, Walmart, another so established stock, if the whole market is up, these stocks will be up. But then there are other stocks which are completely independent of the current market scenario, and typically the high risk speculative stocks, they come into this category. The example is like Nikola. We don't have any history of its finance, and although they are also dependent quite a bit on the general market, but among them there may be a few class of the stocks that are market independent, because they are still in a very starting stage, and their future growth will depend upon their um, future growth that they will show up in the coming time. And some cannabis stock, for example ECB, they may come into this category. So you could use your home equity line of credit or home cash out refinance cash to buy those kind of stocks in the high market, but probably only it's the condition will be much less favorable than when the market actually crashes. So you have to do your due diligence. So I hope this my thoughts are helpful for you as well. If you can subscribe and let me know if this is useful or not, I can keep creating more videos. If you have any question, just send your question in the comment section, and I will try to create a video on those as well. Thanks for taking a look.